Hey there, Canopy growth traders and investors. It's Rod with Pow Group. Welcome back on The Pursuit of Wealth, your home for MJ stocks, crypto assets, news, and interviews. Also home to the best MJ community. Today is Thursday. It's May 30th. Hope you're doing well. And in this video, we're going to be discussing Canopy Growth's Q4 and fiscal 2024 earnings. They did miss estimates, pretty much exactly what I expected and mentioned in my video. If you haven't seen the earnings prep video or my video from yesterday saying whether or not could Canopy save the sector, I did anticipate a miss, but overall, not a bad report. They did, like I said, miss in terms of estimates, though, with revenue, and EPS was a huge miss. We'll take a look at that in just a moment. We'll bring up the chart as well and some other news that we'll discuss. But as always, this is not financial advice. This is for entertainment purposes only. You should never buy or sell anything based on anything that I say or write. I'm not a financial advisor. And full disclosure, I do own Canopy in my MJ portfolio. You can also follow us over on X, formerly Twitter. The handle for that is @GroupPow. Going to be using that as my platform of choice going forward. And if you're new, you can subscribe, tick the bell, all that good stuff. You'll be notified on any future YouTube live streams or videos. This is from the earnings prep video. I mentioned that when I went through, added up all the estimates from analysts and divided them to get an average of and a consensus of all the Wall Street estimates, we are forecasting 73.94 million in terms of revenue. It came in at 72.8. So that was pretty close. And then negative 0.312 for EPS, and it came in way worse than that. It came in at negative 1.03, I believe. They had a pretty big loss. So we just scroll down here. Yeah, negative 1.03. So very big miss there in terms of EPS. There was some news with regards to a DEA official saying that MJ is to be rescheduled to Schedule 3 by October. And that's something I've been saying for a while as well, that I anticipate, look at the CGC chart. It still has yet to confirm a monthly uptrend. It's still in a monthly downtrend, actually, while a lot of other names are in monthly uptrends, and they've been in uptrends for many months now, usually since the beginning of the year, whereas Canopy's in a monthly downtrend, right? So we still need that higher low and higher high. So again, I'm up to thinking, this is what I said yesterday, is that we're probably going to see a slow bleed into July 22nd, which is the end of the comment period. I think there's almost like 10,000 comments now. And I said I'm very confident it's going to get done before the election, because it's going to be Biden's political death sentence if he doesn't, right? Like, I'm not from the US, I'm from Canada. I'm not in favor of any politician. I hate them all. But I just want what's best for MJ. So I can't stand politics. It's literally the bane of my existence. But if anybody, anybody can figure out that the only reason why Dems and Biden got put in the office and Senate was because of their stance, pro-MJ stance, right? So if they don't do this before the elections, then it's their death sentence with regards to the political realm, right? But the official says it's possible the review could be completed even quicker, with the finalized ruling coming by the end of September, but as soon as the end of August. And what did I say? Charts look like they're probably going to consolidate for another month or so. People are going to think it's a summer lull, nothing to see here. And then, they'll probably be proven right for the first month or so. And then into the end of July and August, we should start to see things kick into high gear, no pun intended. But this was a post from Canopy Growth. So Q4 fiscal year 2024 highlights. They had 16% increase in consolidated net revenue, excluding divested businesses, 45% reduction in cost of goods sold, 21% consolidated gross margin, improvement in adjusted EBITDA, 63% and 77% improvement in free cash flow. Storz and Bickel net revenue was up 43%, and that had to do with their Venti vaporizer. Lots of great reviews from that. But yeah, cash. Canadian medical net revenue plus 16%. Canadian adult use plus 2,300 points of distribution added nationally. And cash and short-term investment balance of over $200 million. No material debt due until 2026. So that was a big takeaway as well, that they didn't have any debt due until 2026. They have a pretty decent cash position on their balance sheet, and they also have a stake in TerraSand. They have about 17.5% in TerraSand, which they could exercise those shares, and it would be equity. And they were going to do that under the CUSA, so Canopy USA, because it's touching, it's a business that touches the plant in the US, so it's going to be better for the US entity to do that. So and they mentioned that CUSA has a big cash position as well. We didn't get any insight, as I mentioned in my previous videos when we were doing the earnings prep. I said that we're not going to get it until the following quarter, but there has been a little bit of a delay with regards to Jetty Wana. Those are private companies, but Acreage is public, so they're running into a little bit of a roadblock there, but they said on the earnings call, they didn't foresee any issues with Jetty and Wana. They think that's going to be done in the near term, in the near future. And then they said Acreage, they don't anticipate any issues there either. It's just taking a little bit longer. So we're more than likely not going to get any insight into the financials of CUSA until more than likely, I would say 2 quarters from now. Not the next one, but the next one. If it comes the next one, great. But I'm probably, in the camp of thinking it's going to be a couple more. Maybe Q2 of 2025. International markets, MJ net revenue plus 32%, top 4 market share in Germany. And shareholders approved special resolution, Canopy USA moving forward. And we'll go through just couple highlights here. Stores and Bickle delivered its best Q4 revenue for the quarter, with net revenue increasing 43%, as I mentioned, compared to the prior year. Canada Medical MJ net revenue increased 16% in Q4 and 10% in fiscal year 2024 year over year. Canada MJ cost of goods sold decreased by 54% in fiscal year 2024, so righting the ship there and becoming an asset-light model. Following recent balance sheet actions, the company has no material debt obligation due until March 2026. And all financial information is reported in Canadian dollars. So as I mentioned, Stores and Bickles was a shining star in the report. Also, their international gross margins of 40%, that was something to note as well. And that's usually those international sales and wholesale deals that get you the margins, right? But consolidated gross margins increased to 27%, an improvement of 4,600 basis points year over year in fiscal year 2024, with Canadian MJ, international markets, MJ, and Stores and Bickle all posting higher gross margins year over year. So their operating loss from continuing operations of $229 million in fiscal year 2024, adjusted EBITDA loss was $59 million in fiscal year 2024, representing an improvement of 72% year over year, driven primarily by revenue growth and successful cost reduction actions taken to date. Their cash and cash equivalents, as I mentioned, $203 million as of March 31st, 2024. Benefiting from balance sheet strengthening actions. They did mention as well that they raised $47 million in private placements. I think it was initially expected to be $50 million, so it was $47 million. So that, in my opinion, I believe cut down a little bit on the dilutionary event as well, which I think, the stock was up quite a bit today at the open. And I think it could have been mostly due to that post that I mentioned about the DEA official, and that came from the mjherald.com. I'm thinking that likely had something to do with it, but yeah, I don't think that this was really the market, loving the report. It wasn't that great of a report. Maybe they liked the fact that there was no debt due until 2026, over $200 million, Canopy USA, TerraSand 17.5%. So there's a lot to like here. Like I said, don't bet against Canopy because it's got, David Klein from Constellation Brands. It's got Constellation Brands at its back, right? And they're still committed. They exchanged their shares, which they mentioned in this as well, they converted into exchangeable shares. And, you got to think about this for a second, right? We're so early, it's not even funny. And I see tons of retail thinking that Canopy's not going to succeed long term. But here's the deal. If anybody can make it, it's going to be Canopy because it has the financial backing of these big corporations and CPGs, right? And we're talking, billions and billions of dollars. So, if the average Joe and Jane think they're smarter than $1 billion, how much is Constellation Brands worth? Are you smarter than a company that makes billions of dollars? Probably not, right? So we have to kind of look at it for what it is. Obviously, they were early in their investment, but the thesis remains the same. And this industry is going to be absolutely massive. It's just we're a little early to the party, right? The great thing about being early is we're early and we can buy in at low prices. But the bad thing about being early is we're early and we have to wait, right? And it's pretty painful, especially when you're going through a multi-year bear market. So I'm not going to go through everything. Most people have probably already read this, so I don't want to bore everybody by just reading text on the screen. But I did have a couple of highlights here. So they did mention that they had some substantial growth in Australia. International markets, MJ fiscal year 2024, net revenue increased 6% year over year to $41 million, primarily attributable to growth in Australia. International markets, MJ gross margins in fiscal year 2024 improved to 40%, primarily due to positive shift in geographic mix. And you have to remember too, right? Like Trulieve, I think, had like 58% margins. That's not sustainable. You're not going to see that in the US when, it goes legal. They're not going to be able to charge. If you look at the price per gram in the US, it's astronomical, right? You're not going to be able to charge $300, $400 an ounce, where in Canada you can get it for like 50, right? And it's decent quality. So you're just not going to see those margins. And eventually they're going to have to expand across the rest of the US. into international markets. And like David Klein said on the call, having Canada is not going to be the most profitable. It's not going to be the biggest market, but it's a great place to be because, you got the US right next door. You can export to Germany and the rest of the EU, and you have Australia, right? And then once they get into the US with acreage and that they have a big position in Ohio, right? And presence in Ohio, and then Jetty and Wana, they're going to be able, and they're talking about getting into the beverage business as well in the US. So they're going to be able to, the density is just going to accelerate at a rapid pace, right? Compared to Canada. And Germany's probably going to be similar to Canada, but, in terms of market, but maybe a little slightly, bigger, but the rest of the EU could follow suit as well. And we're hearing more, New Hampshire could become the 25th state to legalize, and Ohio coming online, I believe it is, just in a couple days. What's today? Today is the 30th, so we have 2 more days. It was the beginning of July, I believe. So Florida potentially on the ballot. It's looking good. Skimming through this a little bit quicker. So I went over their cash position. That's pretty much all I wanted to mention. If you were on the call, let me know what stood out to you. What was your biggest takeaway from the report? Like I said, I think the reaction today, maybe it was attributed to the debt. I would say that that's the most likely scenario because they did have a pretty big miss and loss in terms of analyst estimates and revenue and EPS. And then, like I said, coupled with that news from the DEA official, pretty much everything today was up about 5 to 10%. But then CGC ended the day 1.3%. So I was very skeptical that the market was loving the earnings because quite often, we were pretty beaten down as well. Like we were coming off hourly oversold. We just had an hourly bear flag targeting $8. And from the recent high, I believe it's $15. From the high of the DEA reaction, it was $15. So we're now down 45%, right? So we were due for a bounce. And we basically had no daily resistance all the way up to 11.95. So it was absorbed pretty quickly. We're seeing a daily EMA 12 and 26 bear cross now as well, leading into tomorrow. And we're in a daily downtrend with lower highs and lower lows. So just anticipating another lower high to form. And we could be heading to daily oversold territory. But in terms of the U.S. numbers, it was minus 0.76, estimate negative 0.327. So again, very big miss there, 132.51% miss. And then revenue came in at 53.74. That was the estimate, and reported was 53.732. So slight miss there. But overall, like I said, not a bad report. They're definitely righting the ship. And, I'm not telling you to buy solo hold, but I think, it makes a lot of sense having CGC or Canopy Growth in your portfolio because of their, just their ancillary type of businesses, right? Their stores in Bickle. They've got, a ton of partnerships and links and connections, right? And they're going to be massive. They're going to have acreage. They're going to have Jetty, Wana, right? They're becoming an MSO, just like Cureleaf. They just bought a Canadian operator, Northern Green Canada. So we're going to see the blue chip phase eventually, but LPs will become MSOs and vice versa, right? And overall, not a bad report. The technicals are not looking great though. As I mentioned, we still need that monthly higher low and higher high to join the rest of its peers and confirm a monthly uptrend. We're actually in a monthly downtrend with lower highs and lower lows. So this move's all coming off the low here, and anything under 1920 is just a monthly lower high in a monthly downtrend. So the most likely scenario here was we topped out on the monthly. We come down. I said that we probably weren't going to see monthly consolidation this month because from where we opened this candle this month, we would have had to drop about 57+% just to start monthly consolidation. So I said that wasn't most likely the probable scenario. And then here we are with only 1 day left in the month, and we closed, the low of the day or the low of the month is 820. So, we'd have to drop below 609 to start monthly consolidation. I can't see that happening. That means we'd have to drop tomorrow. We would have to drop 24%. So I can't see that happening unless there's some kind of black swan or, the world starts to end again. But more than likely going to tighten up, and then could even be another monthly inside bar next month. And then I would anticipate in sometime here in June into July, we form a monthly higher low somewhere around that $6 to $5 area, come down for a monthly higher low. If you're wondering when might be a good idea to add, that might be a good add there on a monthly higher low for a longer term swing or a longer term investment. And then we'll get the higher high and confirm the monthly uptrend. But looking at Confluence, we're not looking hot here. We're set to potentially close below the 10-week moving average there at 914. That's not a good sign. We had an early clue that the stochastic cross bearish. That was about a month ago, actually over a month ago, almost 2 months ago now. And then we have a MACD bear cross lining up here in the weekly time frame as well. So not looking good in terms of technicals. More than likely going to see that monthly high or low, like I said, next month. And we do have the 50 weekly there at 613. So I think we could come back down, kiss that. We already kissed it once as perfection support. So we could come down maybe 650, somewhere around that 7 to 650 area. Could we drop below $6? Absolutely. USD this is CGC, so USD, but I'm thinking somewhere around that $7 to $6 should be a nice sweet spot for a bottom to be scouting for. Then we also have the 100 and the 200-day moving average at 641 and 643. So a lot of support in that $6 area. And I think that would be a wise area to target for entries if you're wondering. But we just had a golden cross as well for the first time in over 3 years since the end of 2020. So like I said, I think we're just basically going through that final shakeout, that final period where we're seeing accumulation. We're starting to see things heat up. Everything's focused right now on big tech, crypto, AI. Look at NVIDIA, look at Ethereum ETFs. So just like when Canada legalized, when crypto and big tech topped out, MJ went into a multi-year bull market and then everything went to all-time highs. Then crypto went into a bear market. So something similar looking towards rescheduling, which I think is very likely to happen before the elections. And then I think ultimately Florida will approve adult use. New Hampshire, that puts us at 26 states adult legalized, right? So it's looking really, really good. And I think over the next couple of months, call it the next maybe 6 to 12 months max, I think we're going to be entering escape velocity. And I think at that point, big tech and crypto will be entering a bear market, and that'll bode well for our MJ bags, right? But it pays to be diversified, not only in MJ, but also in other sectors as well. Having a big cash position, I think I have about 15 to, I think I'm closer to 20 MJ stocks now. But you don't want to be over diversified either. You don't want to, spread yourself too thin. But overall, I think there's lots to be excited about. More than likely going to pull back a little bit here over the next month, and then kick it into high gear into the end of July and August, especially leading into the election. So going in it there, it's Rod with Pow Group. Thanks again for joining us in the Pursuit of Wealth. If you found this video helpful, I would appreciate a like, a share, and leave a comment. Let me know what stood out to you most in this report. All right, see you in the next video.